Welcome to Level 4, Lesson 6. My name is RIA the Trader from TradingWing.net. In this lesson, you will learn about the different strategies involved with drawing and using trend lines. So let's get started. Before drawing trend lines, it is important to determine if you are on a small time frame or a large time frame. A small time frame being anywhere from 1-minute candlesticks to 30-minute candlesticks, and a large time frame being anything greater than a 30-minute candlestick. When looking at a small time frame, this is how you should draw your trend lines. When you are on an uptrend, you should start your bottom trend line from a low red candle body, not a wick. On your way up, you should be touching as many candle supports as you can. With regard to the top trend line, you should start from a high green candle body. Again, the body, not the wick. And once again, you should be touching as many candle resistances on your way up. In a downtrend, on the other hand, you should start your bottom trend line from a low green candle body. Again, touching as many candle supports on your way down. With regard to the top trend line, you should start it from a high red candle body. Again, touching as many candle resistances on your way down. Now that we have trend lines out of the way, how would we draw our horizontal support and resistance lines on a small time frame? In a case of a small time frame, I highly suggest using candle bodies and not wicks for more accurately placed resistances. But why exactly am I stating the body and not the wick? This is important. When you are looking at a 1-minute time frame, a wick can be formed in a matter of seconds. In fact, even under a second. That would not be considered the resistance or the support, as it did not hold for even a second. A body typically identifies where the price held. This would be the stronger support or resistance. Let's take a look at an example. Looking at this example here, let's go ahead and draw a trend line as we have identified an uptrend. So what exactly is our criteria? Well, our bottom trend line needs to start at a low red candle body. Here is the low red candle, and here is the body. Once we have started the trend line, now we need to make sure that we are touching as many candles as possible. In this case, if I pull my trend line down, touching the bottom of this wick over here, we can see that we do not touch as many candles as we would like to. If I stick close to the body, however, I now end up touching a lot more candles, as you can see here. This would be a more accurate trend line. With regard to the top trend line, I did mention that we need to start from a high green candle body. Here I have identified a high green candle body. I will go ahead and start my trend line there and touch as many candles as possible. Again, if I raise it up, touching the wick over here, we can see that we do not touch as many candles as we would like to. If I lower it, however, going through the body of this candle or the top of the body of this candle, we touch a lot more candles. This would be a more accurate trend line. And now we have drawn the correct support and resistance trend line on a small time frame. Now let's look at drawing horizontal support and resistance lines on a smaller time frame. Drawing support and resistance lines on a wick is typically not a great idea. Let's have a look at a quick example. Let's say we drew our horizontal resistance at the top of this wick over here. We will quickly see that this is in fact no real resistance point. If we take it to the body over here, however, we can see that we actually reject this line in this region here. But RIA, the wick is going past that resistance line. What does that mean? Well, in a previous lesson, I did mention that horizontal support and resistance lines should not be taken as lines alone, and instead should be taken as regions. Once you identify it as a region rather than a line, everything starts to make more sense. When looking at large time frames, the important aspect to consider here is that unlike smaller time frames where we only consider the body, we would also consider the wick on a large time frame. Feel free to go over the slide and take the notes. However, the only difference here is that we are also considering wicks in addition to bodies. Let's take a look at an example. In this example, we have quickly identified a downtrend on a large time frame. So what exactly do we do in this case? Well, when it comes to trend lines, on a downtrend, on a large time frame, we start from the high red candle body or wick. You can do both, one or the other. I'll go ahead and start on the body, as the wick and the body are not that far apart, and I will try my best to make as many candles touch as possible. It may not look like it yet, but if I go ahead and zoom out, we can actually see that we have touched as many candles as possible on our way down. Notice how this line serves as a great resistance mark. In terms of the lower line or lower trend line, we would start from the low green candle wick or body. In this case, I'm going to start from this wick over here. Once I go ahead and start there, I'm going to try my best to touch as many candles as possible. Now that I have gone ahead and drawn that, we can see that we have a support here, a support here, a support here, a resistance here, a resistance here, a small support here, and so on. Now we have drawn some pretty good trend lines. Of course, you can still go ahead and draw more trend lines to be a slightly more accurate trend line. Notice how here I started from this low green candle wick and worked my way through as many candles as I could. This drew a different trend line, but also serves as resistance in this region instead of support in this region. The more trend lines you draw, the more accurately you can identify support and resistance. When drawing support and resistance lines, it's important to note down that you can mix time frame trend lines. Mixing time frames provides the most accurate readings of support and resistance. This is because it provides a wide variety that may normally be missed. For example, if you looked at a smaller time frame, you would only be able to draw a certain amount of support and resistance lines. With a larger time frame, you would only be able to draw the strong and main support and resistance lines. So the small time frames pick up the minor support and resistance, whereas the larger time frames pick up the major support and resistance. By mixing these time frames, you get both the major and the minor points of support and resistance. If you are going to use only the small time frame, I would suggest you use it for simply scalp trading. If you plan on day trading, or swing trading, or position trading, and so on, I highly suggest you use a mixed time frame. And keep in mind, the more candle taps, the better the trend line is. Let's take a look at an example. Let me go ahead and show you how using a mixed time frame trendline strategy will give you a more accurate reading of support and resistance regions. The current time frame we are looking at is the daily time frame. So I'm going to go ahead and place my support and resistance lines where I see fit. This is on the wicks and the bodies as we are on a large time frame. Once I have gone ahead and completed as many as I can, we will cut down to the smaller time frame to understand exactly what is happening. So now that I have the majority of lines that I'm happy with, I will go ahead and cut down to a smaller time frame. Notice how I used the previous history to draw these support and resistance lines. And based on those support and resistance lines, we can now look at the present, and they are still effective in the present. But those large time frames did not give us the exact reading that we want. We are still missing some support and some resistance lines. For example, here, even here, right? Now that we have mixed these time frames, we start to get a better understanding and a more accurate reading of support and resistance lines. If we only use the large time frame and cut down to the smaller time frame, we would be missing plenty of resistance lines, and we would not understand why the stock is pulling down in this particular region, for example. Does that make sense? When using trend lines or horizontal support and resistance lines, there are three main strategies that you can use to increase your chances of making a successful trade. The first strategy is known as breakout trading. But what exactly is breakout trading? This is the idea of playing the same direction of the break, either out of the support or the resistance. If there is a break below the support, this is a time to short. And if there is a break above the resistance, this is a time to go long. Obviously, it is not that simple, but that is the idea of breakout trading. Now, what exactly is considered a break? If you are going long, a break would be a green candle both opening and closing above the resistance line without touching the line at any point. This means that neither the wick of the candle nor the body of the candle should be touching the resistance line. When you're going short, on the other hand, you would be looking for a red candle to both open and close below the support line without touching it. And again, neither the wick nor the candle body should be touching that support line. There are instances where a stock may run without breaking the resistance or breaking the support. It may simply just run right through. What exactly would you do if you see this? A majority of traders have the fear of missing out, better known as FOMO, F-O-M-O. So they will try their best to get into that trade because they believe that they're going to miss out on a big run, when in fact, this is typically a fake breakout. What I would suggest you do in this particular case is wait to see if there will be a pullback first. In most cases, the stock will pull right back to that resistance line or that support line, or even continue breaking below or above. Now, what do you do if you miss out on a break? If there is a break, but you just so happen to miss it by a couple of minutes? My advice is this: do not force the trade, because again, in most cases, the price will pull back to the line before it continues to run. Let's have a look at an example. In this example, I quickly identified a downtrend, and so I drew my trend lines based on this downtrend. If I want to go long, I am looking for a green candle to both open and close above my resistance without touching it at any point. In this particular case, it would be this candle over here. However, this would only be a trade an amateur trader would take, because in most cases, amateur traders draw very simple trend lines and do not look at drawing multiple trend lines. Instead, they typically draw one or two and stick with that. If you want to be a more successful trader, I highly suggest drawing as many trend lines as you can. A more experienced trader would avoid taking this trade. We can see here that as soon as we hit the next resistance, we pulled down. So the amateur trader that bought here would be losing the trade over here. The more experienced trader would wait for a break out of both resistance regions. That would be this candle here, as it is not touching this resistance line. Once this candle closes, the more experienced trader will now enter a position. They would enter the position at the start of the next candle, being right over here. As soon as they enter, they see very quick success. One thing to keep in mind is that breakout trading does not only apply to trend lines and horizontal support and resistance lines. It also applies to a zone known as the accumulation zone. The accumulation zone forms either following a large run up or a large run down. In many cases, if an accumulation zone is successful, the move will be the opposite of the initial move. So if we ran down, formed an accumulation zone successfully, we would assume that we would run up. The same applies for initially running up. We would assume that we would then run down. But how exactly do we find this accumulation zone, and how do we go about using breakout trading with the accumulation zone itself? The first thing you must do is identify either a large run up or a large run down. Following that step, you need to then identify a point of consolidation. This is when the stock or the security is trading sideways. And in this particular case, it would be this lower region here. We would go ahead and draw a zone from the highest point of the beginning of the zone to the lowest point in the zone. That would be our accumulation zone. Now, we need to look for higher lows being formed. Once we have identified higher lows, we can now assume that our accumulation zone is reaching a greater validity. We would then wait for a break out of the accumulation zone before adding. In this particular case, we did not get a break out. In fact, we ran straight up. This is what I was referring to earlier. There are cases where this could be a fake breakout and follow with a pull down. In this case, however, that did not happen. In fact, we got a break on this candle. As a more advanced trader, you would go ahead and add at this region here on the next candle. Once you add, you will see that we quickly make some gains. Keep in mind, another way to look at the accumulation zone is by looking at it as an ascending triangle. Remember, the ascending triangle is a bullish pattern. The top resistance line is horizontal, and the bottom trend line is ascending. This would be an ascending triangle as well. Once we break out, we can then continue to run up.